find it really hard to project to the end of the year on short time frames, but I am very, very deeply believe that Bitcoin is heading up and to the right massively, and that we're going to hit those hyperbolic targets of 250, 500, and $1 million. Given if we're at $1 million Bitcoin, like what you can buy with $1 million is going to be dramatically less, because I think it's all about the denominator and the debasement.
Yeah.
I think the fact that we're seeing the debasement trade all of a sudden catch fire as a narrative, when Bitcoiners have been literally screaming about this for 15 years, when you have JP Morgan talking about buy Bitcoin, gold, and silver as a hedge against, debasement. You have Paul Tudor Jones, same list of assets, but also including the NASDAQ. Ken Griffin of Citadel saying buy Bitcoin and gold because of the debasement trade.
Yeah.
I find it hard to believe that that's the finish line, not the starting line for that trade. So I really think Bitcoin's going to go up.
As Bitcoin slips below $111,000, renowned trader Scott Melker sees opportunity, not fear, calling the move proof that Bitcoin remains the market's most independent and resilient asset. Scott Melker, known as the Wolf of All Streets, is a renowned crypto trader, investor, and podcast host who remains optimistic despite Bitcoin's latest pullback. Bitcoin extended its decline below $111,000 on Thursday, retreating from the recent high of $116,000 and sparking concerns of a potential lower high after this month's record near $126,000. Yet, Melker views such sideways or choppy market action as a healthy sign, reinforcing his long-term belief that Bitcoin remains a beautifully uncorrelated asset within global markets. According to Melker, Bitcoin's independence from traditional asset movements adds valuable diversification to investor portfolios. He remains unfazed by the short-term dip, emphasizing that the market has advanced far beyond the regulatory uncertainty of prior years. Institutional participation from giants like JP Morgan, CitiBank, and Goldman Sachs continues to build structural strength beneath Bitcoin's price. Melker also highlights the Federal Reserve's acknowledgment that crypto is now woven into the fabric of the economy, marking a pivotal step toward mainstream integration. While stablecoins accelerate global hyperdollarization, giving people in inflation-hit nations access to dollars, Melker's conviction in Bitcoin's long-term trajectory remains firm, predicting it could surge to $250,000, $500,000, or even $1 million as currency debasement deepens and adoption expands. What's your take on Scott Melker's bold Bitcoin outlook? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more market insights and crypto updates.
I love when Bitcoin sort of chops sideways and crypto seems questionable when other things are going up or down dramatically, because it furthers my very long-term argument that Bitcoin is a beautifully uncorrelated asset and obviously adds idiosyncratic risk to any investor portfolio. So obviously the holy grail for any investor is to have some asset in their portfolio that has a chance to do something different than all the other assets in their portfolio. And Bitcoin, if you look at Sharpe ratios or correlations over its existence, has really offered that. And it's very compelling when you actually dig into those numbers. Unfortunately, sometimes that means that when the other things are moving, your thing might not. And sometimes it even means when things are going up, your thing might go down. But at least it's still moving in a different manner than the rest of the markets. I don't have any concern about Bitcoin here. I mean, it's trading at roughly $110,000. Once again, that seems scary maybe if you are comparing it to 126. I'm comparing it to the Joe Biden administration and the crypto industry nearly being dead in the United States, and people fearing that you wouldn't even be able to trade Bitcoin in any sort of account before we had ETFs or any level of institutional adoption. If you've been here more than a year, you remember just how bad it was and should be encouraged by just how good this is. Depends on which side of the bed I wake up in the morning. So on one side, that's what gets me very excited. Obviously, if you do believe that Bitcoin is going to become a global reserve asset or a fundamental part of the financial system, it can't just exist on the outskirts. You have to go through the existing system to get there, right? The flip side of me is, man, I really loved this asset because it was a hedge against all of the insanity that we're now cheering as we get the adoption, right? We're supposed to be anti-government and anti-BlackRock and anti-institutions. And so a little of me sort of cringes at the excitement around these levels of adoption, because as much as institutional adoption, I think, is definitely here to stay, government adoption can still be fleeting, and I don't think is as 100% secured as many people believe. So I do think that there's still a long way to go. We need to see the Clarity Act. We need to get a lot more clarification on the laws and rules around this industry before we inevitably have more political polarization and the houses potentially flipping back the other way. And listen, I'm not a political person. I'm unaffiliated. I just see it how it is, right? It's calling balls and strikes. And we all know that it's not going to be as easy if the Republicans don't hold the entire government in the future. So those things do still need to get done. That said, to your major point, there's a structural bid under Bitcoin from all of those places that you saw. And those tailwinds are only getting stronger. You look at the announcements, any one of which would have moved the market 50% 2 years ago.
Totally.
And now they're lost in the news cycle on a day-to-day basis. CitiBank to custody crypto assets in 2026. Just today, JP Morgan to accept Bitcoin and Ethereum as collateral. I mean,
that's insane.
These announcements are so markedly insane, if you've been here for a while, that we should pause and take a look at them. BNY Mellon, State Street, Goldman Sachs, JP Morgan, CitiBank, Wells Fargo, Bank of America, everybody has a plan. Even Vanguard, who said never, ever, ever, is saying maybe, right? So like, there's just more buyers coming in who have not had access to this asset class than there are sellers. If you just take the long-term trajectory, it's really astounding. Let's talk about something that's absolutely mind-blowing that happened this week. There was a Fed meeting about payments that focused on crypto and blockchain, and Fed Governor Christopher Waller said crypto is woven into the fabric of the economy and that they're going to create a new kind of account for fintechs and stablecoins and crypto adjacent banks to have access to Fed settlement. If you live through Operation Choke Point 2.0, this is astounding. And that they're going to be looking at the technology to improve their underlying systems. People maybe don't think about is that, for better or for worse, stablecoins create hyperdollarization, right? So, I mean, Bitcoiners probably kind of, shirk at the fact that maybe the best use case of the technology that was introduced with Bitcoin is hyperdollarization because it's a hedge against fiat and inflation. But you talk to anyone around the world in any country that has any sort of inflation or has questionable currency or just wants dollars, they could never get those before. I have friends in Argentina who used to literally go on the black market and they would, pay 3 times the going rate for dollars with their pesos just to get out of pesos. And then even if they had gotten paid in a bank through a bank account, cashed out those pesos, gone to the black market to get dollars, they would go back to the same bank and put the money not in their bank account, but in their safety deposit box. Because they didn't trust the bank, but they trusted the bank security system to put that money in a safety deposit box. Now they just buy stablecoins. They just buy stablecoins. They transact in stablecoins. They don't even have to touch the peso anymore.
As Bitcoin's once predictable 4-year cycle shows signs of breaking, Scott Melker, the wolf of all streets, says the market is entering a new era where macro forces, not halvings, drive Bitcoin's next big move. Scott Melker reveals that the long-observed 4-year Bitcoin cycle may no longer define the market as it once did. Traditionally, Bitcoin's price has moved in predictable 4-year patterns centered around the halving event, when mining rewards are cut in half. However, Melker argues that this mechanism has become a rounding error in today's complex supply and demand landscape. Instead, he believes that macroeconomic factors, such as liquidity trends, global elections, and broader financial cycles, now exert far greater influence on Bitcoin's behavior. Melker points to Bitcoin's early all-time highs, fueled by the approval of ETFs, as clear evidence that the classic cycle has been disrupted. He also notes a major shift in capital flow, with money moving from altcoins to crypto-related equities like MicroStrategy and Coinbase, reflecting a more mature market structure. Despite this evolution, Melker remains firmly bullish, expecting Bitcoin to reach new highs, consolidate, and later spark selective altcoin gains. For investors, he advises traditional players to use ETFs like IBIT for safe exposure, while Bitcoin purists should hold spot BTC in self-custody. Ultimately, Melker believes Bitcoin's trajectory remains up and to the right, potentially hitting $250,000 to $1 million as global currency debasement drives unprecedented demand. Let's get back to the interview.
I think if we're being honest, there are aspects of the 4-year cycle that perhaps we can still look at as valid, but I think it's largely dead in my perspective. And if it isn't dead, it's certainly not the halving that is the underlying reason for the 4-year cycle, right? Because the halving is a rounding error at this point when it comes to the supply-demand dynamics. And at this point, it's maybe a self-fulfilling prophecy or some sort of magic that people still believe in. I think even if you look at past 4-year cycles, maybe it was more about elections or liquidity cycles or other things that have happened. The S&P used to travel in a 4-year cycle for decades until the 1980s or 1990s as well. So 4-year cycles are not unique to crypto. But if you're looking at the previous cycles and how you would compare, we preempted the new all-time high in Bitcoin by many, many months from when it should have happened in a 4-year cycle. Of course, that was because of the approval of the ETFs. But still, if you're looking at a chart, we shouldn't have been making all-time highs for another 6 to 12 months after that. We have the 4-year cycle is not just Bitcoin, it's also altcoins. And you would have anticipated that the first 6 months of this year would have been massive for altcoins as Bitcoin consolidated at new highs. We didn't see those moves at all. I've been saying that from the very beginning that alt season was going to happen in crypto adjacent public equities. And I think that's largely what has happened. So I think that I was kind of on point with that idea. And we've seen those massive pump and dumps with public equities that are related to crypto that maybe you would have seen in the altcoin cycle before. And so I just don't see it having been repetitive enough to still deeply believe in it. Does that mean I don't think we'll have bear? That doesn't mean I'm like a proponent for the super cycle.
Yeah.
For the record, it doesn't mean that I think that means Bitcoin can't ever go down. I just think we'll have different kinds of drawdowns than we had in the past. The hot ball of money, I think, is coming back into Bitcoin here. Are we talking about the Fed money or the inside the crypto market money?
Both.
I think that goes to Bitcoin first. Bitcoin has to, whether it goes down first, I have no idea, but I'm still confident that we're in a bull market. So Bitcoin will make a new all-time high, consolidate sideways, and then those people will get bored and find a new place to play. And maybe select altcoins will have their little alt season, and then we'll rush back into Bitcoin and repeat again. But once again, I think a lot of that money ends up in digital asset treasury companies, ends up in the Circles, eToros, and Bullishes, and Kraken IPO, and all these other things and places, MicroStrategy, that you can gain exposure to this industry without having to understand how to buy a token. I think it depends on the kind of investor you are. First of all, I don't understand why you would invest in a DAT generally yet, unless it's called MicroStrategy, because it has such a huge lead. And I think that everybody can understand how their very small premium is justified. But most other DATs are launching with larger premiums than a MicroStrategy, which doesn't intellectually make much sense to me. I think if you are a deep believer in Bitcoin, you obviously buy spot. You never touch any of these other products. You want to hold it. You want to be your own bank. But as I sort of alluded to before, if we're going to go through the mainstream system to come out the other side as the most important asset in the world, that means going through traditional investors who understand their Schwab and Morgan Stanley accounts and want 5% exposure to this asset class. And so those people just buy an ETF, right? Just buy an ETF and it'll be a part of your portfolio, and you can take your loans against it and not sell and take the taxable penalties. For me, it's Bitcoin. You buy Bitcoin, and I want to educate people and I want to push them in that direction, but self-custody is terrifying. Most people are going to probably blow it.
Yeah.
So this is a safe way to gain exposure. Maybe I should say it this way. I think IBIT is probably a great gateway drug to spot Bitcoin that we didn't have before. I find it really hard to project to the end of the year on short time frames, but I am very, very deeply believe that Bitcoin is heading up and to the right massively, and that we're going to hit those hyperbolic targets of 250, 500, and $1 million. Given if we're at $1 million Bitcoin, like what you can buy with $1 million is going to be dramatically less, because I think it's all about the denominator and the debasement.
Yeah.
I think the fact that we're seeing the debasement trade all of a sudden catch fire as a narrative when Bitcoiners have been literally screaming about this for 15 years. When you have JP Morgan talking about buy Bitcoin, gold, and silver as a hedge against debasement. You have Paul Tudor Jones, same list of assets, but also including the NASDAQ. Ken Griffin of Citadel saying buy Bitcoin and gold because of the debasement trade.
Yeah.
I find it hard to believe that that's the finish line, not the starting line for that trade. So I really think Bitcoin's going to go up. Select alts are going to do exceptionally well.
The shifting dynamics of Bitcoin's market signal a new phase of maturity, where global liquidity, monetary policy, and institutional participation overshadow the once dominant halving cycle. This evolution reflects Bitcoin's transition from a speculative asset to a recognized component of the global financial landscape. As traditional finance integrates digital assets through ETFs and large-scale investments, Bitcoin's resilience amid volatility reinforces its role as a long-term store of value. In an era of inflation and fiat currency debasement, its appeal as a hedge and portfolio diversifier continues to strengthen. The digital asset's trajectory points toward sustained growth, potentially reshaping how investors perceive and allocate capital in the modern economy. Do you think Bitcoin's new era will break free from the old 4-year cycle for good? Share your thoughts in the comments, and don't forget to like, share, and subscribe for more expert crypto insights and market updates.